Your 401k just placed a bet on catastrophe, and the companies managing it admitted a 1 in 3 chance of total failure is acceptable odds. You see, $2 trillion in retirement money sitting in Microsoft, Google, Meta, and they can't agree if what they're building is safe. I'm going to show you the 5 moves that protect your nest egg this week, and the single question that reveals if your advisor understands the risk and what catastrophe actually means for your money. Because if tech leaders are right about the upside, your grandkids become millionaires. If they're wrong about the downside, 2008 looks like a warm-up. So here's what to do right now. Not next month, this week. Call your financial advisor tomorrow morning. Ask one question. What percentage of my portfolio depends on AI companies? If they can't answer precisely in under 30 seconds, find another advisor. They don't understand what they're managing. Second, diversify out of tech immediately, not into different tech stacks, out of tech entirely. Real estate, treasury bond, boring investments that survive catastrophe. Move 40% of tech holdings this month. And third, download and print your financial statements. Every account, every investment. Create offline backups today. When systems fail, digital records vanish. Paper doesn't. And fourth, write your congressman one letter. Demand independent AI oversight. Not industry boards, independent scientists with enforcement power. You control $28 trillion in retirement assets. That's leverage. Use it. Fifth, talk to your family this weekend. Your kids think AI is ChatGPT or Claude, Alexa. They don't understand the stakes, so share this conversation. Not to scare them, but to prepare them. Screenshot this video, do the first one tomorrow, the rest this week. Now let me show you why this is urgent. There are 3 groups fighting for control. Each one affects your money differently. Anthropic urges caution. They sent an urgent warning to the White House. According to their safety report, we believe the impact of AI might be comparable to that of the industrial and scientific revolution. We aren't confident it will go well. Industrial revolution scale impact, but not confident it goes well. That's directly from their website. You see, OpenAI is racing ahead. Sam Altman, their CEO, says AGI is unstoppable. AGI means artificial general intelligence, machines smarter than humans at everything, not just calculations, everything. He says it's inevitable, coming whether you're ready or not. Their plan? Figure it out as we go. Your government created an AI safety board. Guess who's on it? The same tech CEOs racing to build AI. Imagine if cigarette companies ran the FDA. That's what's happening. One group says slow down, one says speed up. Your government? They put both in charge. Your Medicare claims? Well, AI will process them by 2026, months from now. Your Social Security calculations? Well, AI will determine them. Your medical diagnosis? AI will influence it. Not someday, next year. And the companies building it fundamentally disagree about safety. Here's what Wall Street sees. Stanford economists calculated that AI would deliver 10% annual growth. Compound that over 40 years. According to the forecast, global incomes increase more than 50-fold. 50 times more wealth. That's your grandson's working at McDonald's. His kids could be your grandson working at McDonald's. Well, his kids could be millionaires without doing anything different. The promise is real. Diseases cured, energy solved, aging reversed, wealth exploding. You see, JP Morgan processes over $10 trillion daily. Trillion with a T. AI scans every transaction for fraud. Your electrical bill? Well, AI manages power grids. Cut costs in half. Your prescription drugs? Well, AI discovers them 5 times faster, 10 times cheaper. 25 billion poured into AI last year. Microsoft alone spent 50 billion. Google spent 40 billion, and Meta 30 billion. Your index funds own all of them. Every retirement account in America is now an AI bet, whether you know it or not. Well, here's what they're not telling you about the price. Stanford's research reveals something very interesting. According to their extensive modeling, people might accept a 1 in 3 chance of catastrophic AI failure for such economic gains. So let me say that again. 1 in 3 chance of killing everyone to get 50 times more wealth. Russian roulette has better odds. So let me tell you what catastrophe actually means to your account. Remember Silicon Valley Bank collapse in 48 hours? Nobody saw it coming. The smartest financial minds missed it completely. AI failure wouldn't take 48 hours. It could take 48 seconds. Your account's frozen instantly. Can't access money, can't transfer funds, can't prove what you own. Your medical records scrambled, your identity stolen, globally, irreversibly. Not a market correction where you lose 20% and recover in 2 years. Total system failure where your balance reads 0 and there's no backup. Remember the Boeing 737 MAX took 2 years from the first warning signs to grounding. 346 people died because regulators trusted the company. Now imagine that scenario with a system that runs your entire financial life, your specific portfolio risks right now. If you own an S&P 500 index fund, roughly 28% is tech stocks. Most of that, Microsoft, Google, Meta, Nvidia, Apple, all betting everything on AI. So let's say you have $500,000 in retirement savings. That's $140,000 directly exposed to AI company risk. If the 1 in 3 catastrophe scenario hits, that's $140,000 doesn't drop to $112,000 like a normal correction. It goes to 0. Your Social Security trust fund invested in these same companies. Your pension, if you have one, same exposure. Your Medicare funding, same bet. Well, this isn't diversified risk spread across different sectors. This is concentrated exposure to companies racing to build something they admit might fail catastrophically. The new AI safety board meant to protect you? Well, according to the governance report, it sparked criticism for its potential to prioritize corporate interests over public welfare. Well, the translation is this: the foxes are guarding your henhouse. These companies have one job: maximize shareholder value. Your safety? Well, that's called an externality. And externality means a cost they don't pay. You pay it. They profit. You lose. They'll accept 33% catastrophe odds because they're playing with your chips. They win, they're trillionaire. They lose, you're broke. So let me be clear about what's speculation versus what's documented fact. If AI development continues at current rates without independent oversight, we could see catastrophic failures within 5 to 10 years. That's my assessment based on historical pattern, not proven, pattern-based prediction. Now, the Boeing 737 MAX pattern, well, company assured regulators it was safe. Regulators trusted them. 2 years from warning signs to disaster. The 2008 financial crisis pattern, banks said subprime mortgages were safe. Regulators believed the models. Nobody saw the collapse until it hit. Silicon Valley Bank pattern, 48 hours from stable to close. AI operates at digital speed. When it fails, you don't have weeks to react. You might have minutes. So you lived through existential threats before. The Cuban Missile Crisis, the Vietnam War, the 2008 financial crisis where you lost half of your retirement. But you could see missiles coming. You could protest wars. Markets recovered from 2008. But this is different. AI is invisible. It's instant. It's everywhere already. That spam filter, that's AI. That fraud alert, well, that's AI. Your 401k investment choices, well, that's AI guided. You're already trusting it with everything, but nobody asks your opinion. So by the time your grandchild graduates high school, AI will be smarter than every human combined. Not metaphorically, literally. So what world are you leaving them? Your money, your healthcare, your grandchildren's future, all hanging on whether these companies get it right. And they're telling you openly they might not. So those 5 steps protect you regardless of the outcome. If they're right about the upside, you still benefit. If they're wrong about the downside, you survive. Now call your advisor tomorrow. Ask that one question. If they can't answer it, you know what to do. So subscribe to the Han Brown Show for more analysis like this, and share this video with someone who has everything in tech stocks. That friend who trusts the experts, that relative who thinks institutions have it under control, that neighbor who's never questioned their advisor. Your portfolio, your choice. But make it an informed one. Thank you for watching.